We welcome David Dawe from Rome, Italy. He is with the United Nations, one of the world's experts on rice. David, you and I only talk when it's grim. It's not as grim as a few years ago, is it?
No, the situation's a lot better than it is right now, particularly for rice. Rice prices are only about half of the level they reached during the peak in 2008. So overall, the situation's much better from the standpoint of food security in the developing world.
It's better. There's not a panic, and yet I recall riots of some form or protests in Algeria. Would you suggest that higher commodity prices, higher food prices, has folded into the unrest we've seen in North Africa?
I think that there's some possibility of that they serve as a kind of trigger for things. Of course, they're not going to cause problems all by themselves, but they can be a trigger for some of this unrest. And of course, in that part of the world, rice is not important. It's, wheat is the name of the game there. And wheat prices have gone up a lot more than rice.
Well, I don't know. Do you look at a rice-wheat ratio? Folks, let's look at dreaded first chart. We've showed this often. You could call this the David Dawe Index. It's the United Nations Food and Agriculture Index. David, you can say what you can about your expertise in rice. That's an ugly chart, exceeding what we saw a few years back. What is the character overall of global food if rice is doing better?
Well, there's been a lot of price increases for sugar and oil seeds. Those prices have gone up quite a bit. Some of that drift that you see up in the chart is just due to general inflation. That'll take a little edge off of it, not a lot. There's no doubt that food prices are strongly up. The good side of it is that cereals are up less than they were before, and cereals are what count most for the poor in terms of the money they spend. But there's no doubt that there's some serious increases in food prices.
What can governments do about it? Your essay, February of this year, folks, Economic and Social Perspectives, the 2007-8 rice price crisis. David Dawe, looking back at what we saw a few years ago, you really pin the blame on government policy. What government policy would be productive now versus the mistakes of a few years ago?
Well, I think on several fronts. One is for policies to be more predictable, and also to allow a greater role for the private sector in carrying out trade. We saw during the previous rice crisis that the private sector was sidelined in a lot of countries. That led governments to make very big purchases, often at above market prices. That's speculation or hoarding of a sort. And a lot of that served to drive the market very much higher. And there are some positive signs, at least in terms of rice, that the private sector is now being allowed to play a greater role in procuring supplies. And also just generally to be careful in terms of statements. I mean, we saw during the last crisis in 2007 and 8 that some countries were discussing plans to form a rice cartel. Others were talking about advising restaurants to cut back on the portions served. I mean, all of these things tend to fuel a sense of panic.
Let's talk, David Dawe, about your expertise for years in Asia. Folks, this is a chart we've brought up many times, and you heard Dr. Dawe say rice is not the big deal this time. It was a few years ago, but it does show the gift of the last decade. David Dawe, it's inflation-adjusted rice. What a remarkable gift we had 2000 to about 2006. Rice prices and food prices were cheap. Why did that occur?
Well, food prices got really low around 2000. That's when they hit their trough. And a lot of that was just due to investment in technology through agricultural research, governments building roads to move extra production to markets. But certainly a big factor was much higher yields for rice, and that was the culmination of a lot of research. The research funding has fallen off in recent years, especially for some of the cereals, and that gradually led to higher prices as we saw prices go up from 2000 to about 2007, more or less steadily.
We're going to come back. David Dawe with us, folks, from the United Nations. We're honored to have him on today. Decades of experience looking at how the impoverished get by with difficult food prices. We're looking at food here. Matthew, bring it right in here. This is the Standard & Poor's Goldman Sachs Agriculture Index, short-term, 2002. Here's that David Dawe ugly price rise. Rice not so bad this time, but look at all the others here. Joining us now, we've got David Dawe in Rome with the United Nations, and Art Barnaby joins us from Manhattan, Kansas State University. Professor Barnaby, you deal with American farmers. They gotta love higher food prices. Am I missing something there?
In most cases, of course, it's going to add to their profits to have those higher prices. Question always is, will they stay there? Because when prices rise, you tend to bid up input costs too, which is the other side of the equation.
You bid up input costs. We'll talk to you about that in a second, David Dawe, but do you also have to make a choice about what to plant? That's your expertise, is the risk management of the farm, the financial management. What decision are they making right now, this February of 2011? Are they guessing soybeans, corn, or wheat?
I think for the most part we're looking more at the corn than anything else. But the problem is that soybeans are very high too, or really from a historical perspective. One of the questions is going to be is will wheat be destroyed to replace it with either corn or a close substitute, sorghum, and of course soybeans. So at this point, it's too early to say. There is some concern about the wheat crop, and that's primarily the market interest in wheat.
And David Dawe, let's bring this to the world. Farmers in the United States make these decisions. Are those same decisions made in France with their wheat crop or in other nations? Do they make the same kind of choices?
Yes, they face the same kinds of choices. In some developing countries, they have an additional problem in that the prices often can be high when they decide what to plant. But then if they come crashing down in a few months, they could be quite low when they need to sell. And that's another problem with these. Not only are prices high, but prices are often very volatile now. And so they move up and down a lot. And this really increases the decision burden on farmers, especially in developing countries where they have no access to futures markets.
Dr. Dawe, let's bring up too much information for you. This is the David Dawe Alley. Art Barnaby, I want your help here as well. Rice inventories are so 1980s, and this is the ending stocks for rice. It's just a series off the Bloomberg, and you can see the diminished stocks there. Art Barnaby, are American farmers up to their eyeballs in inventory right now? Do we have a lot of wheat laying around? Do we have a lot of rice laying around?
Well, I don't know much about rice other than I like to eat it. But from the wheat standpoint, no, we're nowhere near the record prices that we were a couple of years ago. There's still sufficient carryover. We're looking at 33% stocks-to-use number in the last report. So it's really the corn and soybeans that are tight, and that's drawing wheat acres into those other crops. Plus the concern, as I said, about the weather on the current wheat crop that's the winter wheat crop that's growing right now.
David Dawe, I want to squeeze this in before we hear from Liz Ann Saunders from this morning. David Dawe, when you look at the stocks around the world, you told me a few years ago rice is an incredibly local product. Is wheat a local product globally?
Well, it's traded much more widely than rice is. Rice is, a lot of it, is grown in Asia and one part of the world. It's a very thin market. Only about 7% of world production is traded, and the figure for wheat is at least double that. So I think wheat is much more of a global product than rice is.
Let's do this, folks. Liz Ann Saunders of Charles Schwab this morning, just a great interview. I spoke with her and I asked Liz Ann her take on food inflation, its effect on the U.S. economy.
I don't have blinders on to the ills that food and energy price increases cause to the consumer. But I think what we have to focus in on is whether it is filtering into core inflation such that the Federal Reserve is going to feel compelled to do something, which I think is not the case.
Liz Ann Saunders, David Dawe, I want to talk to the obvious question to Art Barnaby, but to you, how quickly does food inflation get into the economy of more impoverished nations? How rapidly do they feel the the pain that we see in market prices? It's got to be instant.
Yeah, markets generally work pretty well in these countries, actually, and so the prices can get transmitted pretty quickly, especially if the increases on world markets are sharp. People spend a lot of money on this. In the case of rice, it really filters through, because rice, under the price that you see on world markets, is for milled rice. It undergoes very little processing before people eat it. You know, there may be a little less pressure in terms of wheat for the same price increase, because the wheat products that families eat have a lot more processing, and so the cost of the raw material is less important than it is for rice.
Here's real wheat, folks. Let's bring up this chart. Art Barnaby, real wheat up 209% from the 1999 bottom. Granted, folks, I picked that statistic for drama, but you can really see how wheat has gotten expensive. Not like a few years ago, but getting there quickly, inflation adjusted. Art Barnaby, when you have the celebration of farmers in your Kansas and in the greater Midwest, when are we going to see that pain in New York, in Chicago, and in Los Angeles?
Well, if you took the wheat price at $14, and we're nowhere close to $14, and in fact, the futures price doesn't really reflect the cash price at this point. We've got a basis problem, but that's a different deal. The point is, at $14, there's only 20 cents worth of wheat in a $3 loaf of bread. The food prices in the U.S. are going to come more in the meat market, because those higher grain prices do get filtered in to cost of producing meat.
This is a critical point. We're going to come back and talk to Art Barnaby about this. But David Dawe, do you buy the idea that a large part of the developed world is going up the food chain, that they're having more protein, they're having more chicken, more pork, whatever?
I don't know. That may have peaked now in developed countries, but certainly in developing countries, they're definitely moving up. I mean, especially in China and India, people are eating a lot more meat, and that trend will almost certainly continue in the future as long as economic growth continues.
David Dawe, how is nutrition in Africa? Has it been a good couple years in improved nutrition in Africa?
Well, it's a mixed picture, but part of the good news, at least for now, is that there have been pretty good harvests in much of Africa. And so, for example, in southern and eastern Africa, maize prices in general, the corn prices there, have not increased all that much. The increases in African countries have been much less than what it's been on world markets. Of course, they eat a different kind of maize. It's white as opposed to the yellow maize that is grown in the United States for feed. And that may be one reason we see a little bit less transmission, but so far it's holding in good shape.
David Dawe, great to speak to you again from Rome with United Nations. Folks, this book is must read. Whatever you think about incentives and regulation and development economics, Bill Easterly of New York University, The White Man's Burden, a controversial book, why the West's efforts to aid the rest have done so much ill in so little good. Whatever your thoughts, it's challenging reading. Bill Easterly at New York University. Art Barnaby with us from Kansas State University, and he was talking earlier about we focus in the markets, grains, corn, wheat, this, that, and the other thing, and you're dead on, Art Barnaby. A little bit I know about this. It's all about meat, folks. Here's lean hogs. Believe it or not, they call them leaning hogs. I have no idea why that is. Leaning hogs are rising in price. Art Barnaby, which meat should we follow if we want to try to get out in front of food inflation?
Well, anything that's going to be grain-fed, and that's virtually all of the livestock. Now, you can somewhat substitute forage in the diet of cattle, but it's also going to impact things like dairy, too, because that's going to up their production cost, and eventually that has to get worked back into the price of milk and meat. What's driving that is...
No, go ahead, please.
What's driving that is the corn numbers. When you look at the supply-demand numbers, we are now putting 2 Iowa corn crops in the gas tank.
That's the factoid of the week. Folks, break exclusive, Art Barnaby, Kansas State University. Did you just tell me we're putting 2 Iowas into the ethanol program?
Yes.
Remarkable. Continue.
And if you look at the history, and I sent you those numbers going back to 2002, the ethanol number has grown every year. And that's what has really driven the whole market. Now the question becomes, if you change government policy and reduce some of the tax incentives that are built into this ethanol climate, what will that do to the demand for ethanol in this corn complex? And I'm sure it will back off the demand. I'm not sure we're going to go back to where we were in 2002, but on the other hand, we've discovered we can produce a lot more corn. It is those corn numbers, though, that are dragging acres out of wheat and soybeans and maintaining those prices, and even cotton now has some really strong prices. Again, corn is out there bidding more acres into production.
As Professor, this is great, folks. Here's the chart. Grain inflation is all about meat. The white line is corn. It's a messy chart. It's a messy, elegant chart. And you can see live cattle and corn, and they're really correlated quite well. Professor Barnaby, when you go in the grocery store, are you shocked by the price of meat? Are we there yet?
Well, I grew up on a cattle ranch, so I sort of look at things the other side.
Well, then how do you look at it?
Higher prices are good for us.
Okay, I'll go with that. But when you go in a grocery store, cattle guy, and you look at a piece of meat, well, how should we look at that we don't in the city? What should we consider when we look at a price of meat?
Well, I'm probably the wrong person to ask. I don't tend to pay a lot of attention to the prices in the grocery store. If I want a steak, I buy a steak. And that's true of a lot of Americans. We've got income levels such that we don't have to make those tough choices like they might in Africa. You know, and I've been to New York a few times, and that same steak in New York cost me $50 that I might pay $5 for at Dillon's here in Manhattan.
Final question quickly, if we could, Professor Barnaby. Record year for American farmers?
Yeah, I'm very bullish. I don't see corn prices falling in the near future unless we get a bumper crop.
Fantastic. Love that purple. Art Barnaby, Kansas State University, with us as we look at food.